officially starting. Welcome everyone, and thank you for being here. And I hope your brains are somewhat stable and open for more knowledge learning today after yesterday's exercise. So today we're going to be going through what trading is, how to get started in it, and go through some of the tools that you might need to use. And then we'll dive into live trading towards the end so you can actually see how everything works. And then we'll also go through how you can level up and upgrade your trading knowledge and connect to the community.
I'll quickly just say we did this morning, and Clive was with us this morning, a couple other people as well, and we went a little overtime. So Kevin and I have kind of had a quick chat, and we're going to do our absolute best to keep it under 4 hours this time. Of course, we may or may not have gone over 4.5 hours this morning, but there was a lot of good questions, so that kind of happened. But we'll definitely keep it between 3 to 4 hours. But there is a fair bit more kind of technical knowledge that we really want to make sure we can try and convey today. And secondly, I will just say straight up, because I know that especially yourself, Linda and Shree, I know that especially you guys, there's a lot of stuff we're going to talk about in trading that is going to go over your head, right? Look, you guys seem way smarter than me, but I know that the first time I got told about candlesticks and the first time I got told about support and resistance and trend lines and all these other things, it went way over my head. What myself and Kevin are trying to do is cram pretty much a 20-hour course into the next 3.5 hours, but just picking out the best parts of it that we know you can potentially walk away from here and try and be successful with it, with a little more training. But I hope all that makes sense. But what I'm basically saying is don't feel freaked out if we're going through parts of this and you're like, Troy and Kevin are talking a different language, because that's how I felt when I first had my eyes open to this world. So don't feel bad about that, and just make sure you're utilizing the chat to drop down any questions as we go. That's all I just wanted to say before we start.
Awesome. Yeah, we had 2 people on this morning. So yeah, it was a bit more open Q&A. So we fell down some rabbit holes, but it was good. Anyway, so investing versus trading, right? We were talking yesterday about mindset, and there's a different mindset you need to have. So when you're an investor's mindset, good thing to remember is that Rome was not built in a day. So, you're looking more long-term. We're looking at hodling and all that sort of thing. Whereas in trading, there's also that saying that Hiroshima and Nagasaki were destroyed in a day. So things can be a lot more volatile. So you need to be strategic about what you do in order to, not lose money, which was the main goal we were looking at yesterday. And trading involves short-term strategies to maximize returns in a specific time period. So whether you're looking at, a few minutes to daily, monthly, quarterly, whatever that is. And so there's different trading styles associated with those time frames. The 4 most prominent trading styles are listed there on the left. And starting from the top, position trading is essentially like investing, where you buy something low and you wait a long time, could be months, could be years, and then sell, after that time. So position trading is, the least stressful. You could just buy something, hold it, and then trade it later or sell it. Whereas swing trading, that goes a little bit short term. So short term meaning it could last from days to weeks. And as a swing trader, what you're primarily looking for are swings in the market. So reversal points when the market goes at the bottom and then when it goes to the top. So you want to try and catch those swings. And then as a day trader, that's even more short term. Usually in stock trading, day trading is obviously done during the day, when markets open and then when they close, and you don't leave positions open overnight. But with crypto, because it's 24/7 market, technically you can trade 24/7, but the day starts from 12 a.m. Universal time till 11:59 p.m. Universal time. So I'll go through that later. And then scalp trading is extreme short term. So some people scalp, within the second, the charts, and then others do like minute charts. So they might enter a whole bunch of trades, even just on one candle, which we'll go through later. And there's no right or wrong way to do this, and everyone has a different trading style. So as you progress on your journey, depending on the assets that you're looking at and the time you have on your hands and your stress tolerance and all that sort of thing, all those will come into play. But it's good to learn what each of those trading styles are like, because it's like learning how to read different languages, or learning how to dance new dance styles or whatever. If you know a few of them, you can pull them out whenever you need to. Troy, you want to add anything to that, or keep going? Oh, you're on mute, buddy.
Sorry, guys. We have this thing in this other role that I've been doing, that if you talk on Zoom on mute, you've got to give a bottle of wine. So I'm glad that that's not in this one. But next time I see you, I'll buy you all a glass of wine. The only other thing that I'll probably add to that is just looking at these. You may be thinking now potentially that, oh yeah, I could definitely see myself as like a day trader or someone like that, because I'd rather just get in and out of a trade. And or you might be like, no, I can. If I was to do one of these, I can definitely see myself more so as someone that waits for the long-term breaks and things like that. The one thing I can tell you is that what you think you're going to be, quite often when you go into this and you start doing it, you realize that you kind of, trading tells you which way you're going to go, because you start just feeling really comfortable with a certain style or a certain way. So probably the thing that I will say is, don't have any preconceived thoughts of what you think you may or may not be as you open your mind towards this, and enter this next 3.5 hours with a completely open mind, because we are going to start talking some different languages that you've never heard before, especially for yourself, Linda and Cherie. So just keep your mind open as much as possible. And when things start becoming overwhelming or don't make sense, just drop a, can you just explain that again? But we will try and clarify things and go over things. But that's the only thing I'll say.
Awesome. So talking about different languages. So, Satoshi is the unit of a Bitcoin. And we went through yesterday that, if you're thinking $1 has 100 cents, well, one Bitcoin has 100 million Satoshi as part of it. So you can get as little as this amount here, 7 decimals, 7 zeros and a 1. So it's 8 decimals total. That's the smallest unit, all the way to a full Bitcoin, which is 100 million Satoshi. And so when we're trading in crypto, it requires a bit of a shift to stack. It's called stacking sats. We're trying to build up our stack of sats, and sats meaning Satoshi. So what can help, instead of trying to figure out decimal points and all that sort of thing, is to just go down to the percentage gains. We mentioned that yesterday. Rather than thinking of dollars and cents or Satoshis or anything like that, you just look at your account and go, okay, how much percent can I grow my stack? And then
it's a good way of looking at it. Try and think, especially during this next 3.5 hours, in not money as in making more money or anything like that. Try and think you're gaining more Satoshis, or you're gaining more of a percentage of a trade, because as your account grows, the percentage figure, well, the percentage stays the same, but the actual amount will grow as your account grows. So it's all about just getting those percentages and getting those Satoshi, as we call them.
And in trading, the general rule is, buy low, sell high. Like never buy at the top, never sell at the bottom. That is relative to the time frames that you're looking at in your trading style and all that sort of thing. But for the purpose of what we're trying to do, remember that the bankless box that we were looking at, the skill cube, our main aim is to accumulate crypto. And so if there's an uptrend, then you want to be, stacking your sats. And then in a downtrend, if you want to protect your investment, then you might want to convert to stable coins or accumulating fiat. So then basically you can have more cash money to buy more crypto when the reversal happens, when the downtrend finishes and it goes back again. So what do I mean by reversals? Well, we go through market cycles, right? Just the same as the economy and everything else in life. Everything's cyclic. In trading, there's a cycle that happens, and with Bitcoin, it's been repeated over and over again. And there's a emotional attachment to it that usually encompasses the entire market. So we're talking about market psychology now. And usually when there's been a big crash or things like that, you're starting at the bottom, and then there's a lot of disbelief, especially for something new like Bitcoin. Initially, people are like, "Oh, what is this? It's fairy play money. It's not going to go anywhere." And then there's a little bit of movement as people kind of get interested, and if they've been conditioned by previous failures, say with other assets or shares and things like that, they'll be like, "Oh yeah, whatever, it's moving up, but like it says there, this rally will fail like the others. You live in a pipe dream or whatever. It's never going to be anything." But then what happens is it gains traction. And this isn't just Bitcoin, obviously. This is any asset, right, or any trend. Something gains traction, then there's hope, and people feel like there's potential in this. If it's just had a big crash, people usually think, "Oh, okay, there's a possibility for recovery." So usually that confidence kind of starts to build up, and then people are like, "Okay, let's buy some more," and more people jump into the pool, and then all of a sudden there's spikes, and then people get optimistic, and they're like, "Oh, like, see, right, we told you so. Like, things are going great now. Like, great time to get in." And the optimism sort of raises, and it hits a level of belief now where people are like, "Yeah, we really believe in the in Bitcoin, say, and this is going somewhere. Tell your mom, tell your friends. Start getting into it. More people start buying and buying until it gets to this point of being a thrilling thing, like being on a roller coaster, right? It's like, I'll buy more, look at it skyrocketing and whatever, until it gets to this euphoric sense where you're like, it's every trade I'm doing, I'm just winning. Bitcoin price is going to the moon. This is awesome, $20,000. Yeah, awesome. I'm going to buy some more because this could be $100,000. This could be $1 million. Like, awesome. Tell everyone now. Tell your dog to get it on Bitcoin. And then what happens is, imagine if you were here at this disbelief stage and you get to this point where like, okay, Bitcoin's $20,000 now. I think I might sell. I'll take some profit, right? Because who wouldn't take profit if you've gone from $1 to 20,000? And then the market or other people start jumping in on that psychology of also selling and selling and selling, and then the price drops, and yet people are still because in that thrill or belief stage, they're like, "Oh, it's just a small thing. It's a correction, so it'll be fine. Let's just buy more. It's still a bargain right now, so let's buy more." And then things don't necessarily get to those euphoric heights because people are kind of like getting complacent and just like, "Well, I don't want to buy too high. I'll wait for other people to buy in." But who knows? The market kind of stalls a little bit, and then it starts this downward trajectory, and then people start getting anxious, and it's like, what did I do? I bought at the top. Some people still have hope that it might go up, but then other people will be like, "Okay, I guess I should get out now. I should sell, some of the bits that I have." And then it gets down to this point of, denial when the markets move down so low, and you're like, "No, it's it's going to recover. It's going to recover." Some people even buy a little bit more, so then like it comes back a little bit, and then essentially like things start falling down. So then there's panic. You can see their panic. Shit, everyone is selling. I need to get out. It's like pull the cord on the parachute. Bitcoin's going down to zero. It's going to die, and then capitulation happens, and people are like, "That's it. I'm selling everything. Selling all the Bitcoin. Even if I bought it at $20,000, I'm selling it because this is dead, and I can't afford to lose anymore. And then you get to this point of anger, right? If you went down this path, you know, people start pointing the finger. Oh, it's the bank's fault, or it's my fault, or it's whoever told me about Bitcoin, like, you know, Uncle Bob down the road, like he's an idiot. What, I should never have gotten into this, and you know, you start those cycles of self deprecation. Sorry, Troy.
It's a scam.
Yeah, Bitcoin's a scam. What is this? You know, and you know, in that case, people also go, well, it's the government's fault. They should have been there to protect me, or the bank should have done this and that and the other. And we go back to that mindset of being, you know, being influenced by a higher authority, or you know, offloading our responsibility. And then that can sometimes move down into depression, and people are like, oh my God, I just lost my life savings. The wife's angry at me, the husband's angry at me, whatever. How am I going to pay for all this new stuff that I bought, and so on and so forth. And then things start moving up again, because the smart traders, you know, at the top here, that's where like what's called dumb money comes in. And then down here, the smart traders are like, hey, this is the real bargain. This is where we'll buy up. You know, it's like a fire sale. And then so the market starts moving up again. And then we go back into this cycle of disbelief. You know, if you bought in before, it's like, oh, this is just going to fail like the last time. You know, so it's a roller coaster. Don't bother. But then next minute, there's hope, and then optimism. And so it just ebbs and flows in the market. And with Bitcoin, we're in this stage now where the market cycle has repeated multiple times. So, and it's, I think, as Troy mentioned before, as Troy mentioned before, you know, Bitcoin, you can look it up. It's died how many? 180 times or something?
Yeah, I think it's nearly 200. It might even be just over that now.
Yeah,
it's been reported in mainstream media as dying for the last 11 years. Like, there's a big actual Bitcoin obituary site that has links to every website and the date and when. And it's no surprise that the majority of these articles that come out are during a bear market. Right, there's like never any articles when Bitcoin's price is shooting up. It's always when it's going down, and then it shoots up again. There's nothing, and then it's as it's going down, and it's all based on human emotion. And with Bitcoin, we've got 11 years worth of data at the moment, and that's what we base our analysis off, and that's what we've been doing our analysis off for years now. And it's gone in these 4-year cycles where over the last over 4-year cycles, right? So where we're in now, we're kind of in this optimism stage. So if you go back to that previous slide, sorry, Kev, we've had that real ride up back at the end of 2017, beginning of 2018, and we're kind of gone down. We've gone through all that anger and capitulation and depression. We're back to disbelief, and that kind of happened around the middle of last year, where it kind of had a bit of a rally, then it went back down. But then there's been more hope this year. And now we've kind of starting to hit those we've nearly touched those all-time highs again. So there's that optimism there. And in the market right now, there's this very much this optimism that this rally is actually real. This is what's going to happen. Now, me and Kevin aren't sitting here saying that the following will happen. It's going to be belief, thrill, and euphoria, and it's going to go to dizzying heights. We're not saying that that's going to happen, but we're basing our analysis on the last 11 years worth of data. And what that tells us is that Bitcoin goes in these 4-year cycles, and where we're currently now is sitting around optimism. And that's where the market is right now. And that's why, you know, we've kind of been preaching what we've been saying for a few years now, but it's still not too late to be coming in and join the ride. But the thing is that if you're going to join the ride, you must have your psychology in check, because I can guarantee you, I don't care how strong-minded you are, maybe you're much more strong-minded than me, but if you all of a sudden have $1,000 in the market and it turns into $20,000 within 2 months, you know, it's a little bit like winning the lottery, right? Because if you can only afford to put $1,000 in, then $20,000 is a substantial amount to get, right? So could you imagine if you can afford to put $20,000 in, right? And then you get 20 times that amount back. And this is the kind of life-changing money that happened to people 3.5 years ago. And this is the kind of life-changing money that Kevin and I believe will happen again based on the last 11 years of data that we have. So that's kind of where we're at. And sorry, Kev, if you could just jump to that next slide again now. We've gone through these cycles again, and the exact same things have happened. And we're happy to, I'll try and remember to share the article with you guys about the Bitcoin obituary. But in these periods, that everyone always said the same thing. You know, it's a scam, it's a bubble, it's going to burst every single time, over and over and over. Sorry?
Tulip scam or whatever. It's
oh, that was the last one. It's like the tulips, you know, that's happening. It's going down to zero. It's just, you know, and we've just got to, you know, go through these ebbs and flows. And now we're on that kind of rise on the way back up. And yeah, it's pretty exciting. And what we'll show you soon will be something that'll kind of excite you guys even more, that these rises that we see end up just being blips in the chart over time when you kind of zoom out.
So yeah, so just as moments in life go up, down, sideways, and eventually better, so too does the market, right? If you look back on your own life, how many catastrophic events happened, or how many turned out to be life lessons? You know, how many times have you had like, oh, this is the best day ever, and then, oh, that's become my worst nightmare, you know, and vice versa. But you're still alive and you're breathing, right? And that's basically the market. The market's there. You're here now. You're learning about something that will add to your life, whether you take action on it or not, because you have a better comprehension of the topic. Hopefully by the end of this this session, and your perspective will be widened. So it's really important to have you know, that cycle in mind, and then pull yourself out of it as well, and just understand, okay, if the crowd is going this way, as a trader, you don't just jump into the crowd and you know, be blind. Like I said, you can trade both ways, when the market's going up and when the market's going down. It's just about understanding that psychology. So over here we have, this is the actual 1 year chart of Bitcoin from, this was 2017. And those blips that Troy mentioned, you can see, like, you know, these charts back then at that time, that would have been the all-time high. And it's like, oh my gosh, this is the best. And then all of a sudden it's a crash now. And then, you know, the cycle continues. Okay, now we're at a new all-time high. Oh, this is the best. And then it's crashed again. And then there's an all-time high there. And then it's crashed again. Oh, now there's another all-time high. So it's just, yeah, it's a cycle. And this is where we are now, where, you know, 2017, there was a peak. So this line chart depicts where the market opened and closed, and we'll go through that later. But essentially, back in end of 2017, we were at this, you know, $20,000 US mark, and then we're back there now, and the candles have closed stronger. And we'll go through candles next. And yeah, the question to ask is obviously, where will you be? Where will you position yourself in that market psychology cycle? Where do you think other people are? And also, you know, what can you do about that? So let me, I'll actually, what I'll do is I'll switch to, oh no, I'll do that later. Never mind. I'll skip to this. I'll skip this slide, but I'll go back to it later. Basically, if you guys did the homework yesterday, you know, about doing your allocation and then opening up accounts, you would have bought off one of these platforms. And then the other thing that you also need is a platform to trade on. So, you know, we talked about exchanges, and there's these options there. There's a ton of exchanges. It's like 300 plus. These are just some that we recommend, or that we use ourselves. And there's a tool called TradingView that's also on the website. It's a free tool, and it's basically where you read charts. And you can download that from the link, I think, on the website. So I'll skip automation and this stuff, and I'll come back to that later. And there's also this app called, there's an app called Coinly that it's also free. You guys might be able to, you guys can download that and then link it to your wallets and your exchanges, and it'll keep track of where things are. And it's also good for taxes if you're going to go down that route of really investing in this and then having to declare tax. This app can just print out all your financials and just give it to your accountant. So, okay, so why is trading the ultimate earning advantage? So we went through the skills blocks yesterday, right? First things first, trading, there's no boss involved. You're the boss, so you've got to be responsible for yourself. But at the same time, yeah, you don't have a boss, so it's like freedom already. The markets are open 24/7, which we've covered. You can start with minimum capital, so you can buy as little as like $10 worth of Bitcoin to start. Also, all you need is an internet connection and a computer or a phone. The way technology is these days, a lot of people just trade on their phone now. And aside from that, the other advantage this gives you is financial literacy. So there would have been some terms that we spoke about yesterday and all this new jargon that has now increased your financial literacy. And hopefully after this exercise, there'll be more financial literacy in your vocabulary. And then also increased self-awareness. So last night's session, we went through a short meditation with Keratin, and he was talking about checking in with your body, checking with the space around you, and doing those things, especially when it comes to trading. We're talking about psychology, the 80-20 rule, all that stuff. Having more self-awareness around yourself and market psychology and all those things will not only help you to be a better trader, but I think it just helps you to be a better human. If you're more self-aware of your strengths and your weaknesses, and then how to improve upon that. And then the other thing that this adds is increased structure and discipline when it comes to wealth and life, your lifestyle. So with self-awareness, I don't know if you guys have familiar with Maslow's hierarchy of needs. I know Keratin, you are, and Linda probably familiar with that as well. But you get to this level of self-actualization, and for those who don't know, maybe look that up. That's like, I'm going to fall down a rabbit hole if I do that. But yeah, having more structure and discipline in your life will ultimately serve to improve not only your trading, but everything else. And then the last part there is, tinfoil hat on, crypto will save the world from further financial depression. It's just, it was born out of what happened with the GFC, with the global financial crisis. And so it's still on purpose to do that, I think. Troy, anything you wanted to add there? Sorry.
I know, like that's pretty much it. Like I think one of the biggest things, and we did touch a little bit on this yesterday, but discipline. It kind of like it opens your eyes to what your strengths are and what your weaknesses are, and to not always just focus on your weaknesses, but like really hone in on your strengths and double down on your strengths. That's the big thing that I've found with it. It's also pinpointed the things that I do need to work on. We spoke a little bit about that yesterday. But yeah, it's the increased self-awareness is one of the massive things that I've got out of it. Yeah, that's all I'm going to say. And like I said before, and I mentioned this before, I can't say this enough, but you really need to be open-minded when you enter this world. And one other big thing we say is just trust the system. So trust what you're learning, and believe in it, because if you can give energy to this, it will pay you back tenfold. If an ex-drummer like Kevin and not very smart ex-tradie like me can do what we've done, anyone can do this. Kevin's much smarter than me, by the way, but all I'm saying is that you don't need to be some crazy rocket scientist to learn this, and if you give it the respect and the time that it deserves, it will handsomely reward you.
Well said. Yeah. So when we're looking for these rewards, right, in trading, what are we actually looking for? There's a bunch of different ways and different strategies, but the main thing to understand is that we're using pattern recognition to identify potential trades. Just as we can identify patterns in our behavior and our psychology, we can do that in a chart. You know, the chart is a representation of what the market is doing. So if we can find patterns in you know, the psychology of what people do that is visualized in the chart, then we can sort of predict where the market will go. When you spot a probable trade, so when you see a pattern that has a high probability of becoming a successful trade, what you do is you run it through your trade plan and see if it fits your rules. So we won't go through trade plans in this session because it's again, another long module, but what a trade plan is basically setting up a list of conditions and rules that you will follow to a T before entering a trade. So, you know, my trade plan has things like, okay, before I sit down to do trades, I'm going to breathe and do a little bit of meditation before I even, you know, start the trade if I'm doing a long-term trade. Some people ask themselves questions like, you know, how do I really feel? Because usually when you sit down to trade, it's like, yeah, cool, I feel great and I want to make money. But then you might be lying to yourself and you're like, well, actually, I'm really desperate and I need to make money. So I'm just going to find whatever I can and you know, grab at it. So you really have to cultivate that discipline and you know, come up with rules and strategies. Like I'll show you, I'll do it later, but I'll show you some of the stuff I do. But yeah, a trade plan is vital. And then once you find the trade, you use a tool called the risk to reward. And basically you size up your risk to reward. So whenever you go into a trade, a general rule of thumb is, you know, you wouldn't go any less than 1-to-1, meaning 1-to-1 risk to reward. So if I'm going to put $1 on the table, I would like to at least have $1 back or more. So, you know, there's no point kind of risking something to get, you know, oh, I'll only get 50 cents back of that dollar. It's yeah, just not a smart kind of thing to do. There are methods to do that, but again, that's a different rabbit hole. Anyway, so once you puzzle that up and go through your rules, you enter the trade, and then you exit the trade again based on your trade plan. So this is where you have to be disciplined again. Where say your trade rule says that you'll only take trades that are 2-to-1, as in the potential to double your position. So I'm going to put $1 on the table and I'll get $2 back if the trade plays out. If the trade doesn't play out, I lose that dollar. So a 2-to-1 trade like that, say that the price suddenly doubles and it's in your rules to exit there, but then you don't follow the rule because, oh, it might go up some more. Oh, now it's 3-to-1, now it's 4-to-1. You know, great, keep going. And then something happens, you miss your exit, and then the price comes crashing back down and you lose out on the trade. So that happens often when people don't follow their trading rules, because what happens is greed sets in. So you've got to, you know, really stick to your trade plan, and then you update your trade plan or your trade journal with the lessons that you've learned. And you know, this is vital as well, because what you write down will basically give you an overview of not just your habits and your success or failure in trading, but you'll learn lessons out of it. So it needs to be measured, and then you basically repeat the process, right?
So we're, like what Kev said, psychology is extremely important in this, and you know, we'd love to do a 16-hour video. We just simply don't have the time, but we're going to fit as much of the good stuff in that we can. But the psychology part is extremely important. Remember, it's 80% psychology, 20% technical knowledge. So I'll cover this one if you want, Kev. Give you a quick breather. So what we're looking at here are candles, right? So, you know, everyone, I'm assuming most people have seen a trading chart before. I mean, you probably would have seen, like, you know, it goes up and down and everywhere. And what happens is that on a trading chart, what you'll see is that a whole heap of these lines, right? And these lines are what we call candles. Now, there's a couple of there's a couple of reasons why there's all the candles are all different, but you've got a green and a red candle primarily. Sometimes people color them a different color, but primarily they are green and red. Now, the best way to think of this is that red means the price has gone down and green means the price is going up. Now, what we can see here is these candles embody a period of time. So when we look at a trading chart, we can look at a trading chart and look at it in 24-hour periods of time. So that's a daily chart, right? So a daily chart, each of these candles represents a 24-hour period. Or you can look at these charts all the way down to a 1 minute period where each candle represents 1 minute of time. So 1 minute, you know, all the way up to a daily, then you've got a weekly chart, a monthly chart, and so on. So what we're looking at here, and the reason why some candles are red and some candles are green, are purely based on where the price opens and where the price closes. So what we've got here on the left is our red candle. Okay, so the reason why this candle is red is because where Kev has got the marker there, the price opened at that point. Now let's say that this candle is a 1 hour on a 1 hour time frame. So sometime during that 60-minute period, so that 1 hour period, the price went up to the top part, which it went that high. And then at some time during that 60-minute period, it dropped all the way down to our lowest point, which is there. But then at the end of that 60-minute period, so at the end of that 1 hour period, it closed, the price closed where Kevin's marker is there at that close mark. So what we've got obviously a thick line, and then there's two thin lines. And what the thin lines, we call them a wicks. So essentially like a candle, and that's the wick of the candle. Now the reason why those lines are there, because it still represents that during that 60-minute period of time, it did reach that high and it did reach that low. But the main reason and the main body opened at that certain point and closed at that certain point. So even though it went down there, it come back up and it closed at a certain point. Now, if, for example, that candle dropped all the way down to that low, but then at the end of the 60-minute period, it rose all the way back up and closed above that open price, then that will turn into a green candle because the closing price of that 1 hour was above the opening price of that 1 hour, right? So the green and red is purely based on, did it close above the opening price, which means it'd be green because it closed above it, or did it close below the opening price, which means it's red? So once again, we can see on the other one, the green candle is the exact same thing in reverse, right? So what it is that it opened at that low point. At some point during that 1 hour time frame, it dropped down lower. And then at some point during that 1 hour period, it went all the way up to that high. But at the end of that 1 hour period, it closed at that certain point. So once again, the closing price of that hour was higher than the opening price of that hour. So therefore, it's a green candle. But if it had been around the other way and the closing price had been below the opening price, it would have been a red candle. So these are significant because these give us these colors and give us a good indication of what direction the market is going during that period of time. Does that make sense, guys? It's just, I know, yeah, I'm getting a thumbs up. So I hope hopefully that does all make sense. Cool. All right, awesome. So what we've got here are all candles here, and these are based on a 1 minute time frame. Yeah. So what Kevin and I show you guys here is that we want to show you on a 1 minute time frame. Is this a 1 minute, Kev, or is this a
like 1 minute time frame, just so people can see the movement?
Yeah, you can see why they go green and red.
I'll zoom in first.
So you'll see on the right, so you see the current price is what that red price is, which is $19,239. That's the current price of Bitcoin as we're speaking. Now, have we got the time ticker there, bro? Where's our ticker?
Yeah.
Oh, there it is. Underneath the price. So you see underneath the price there, it's got 0036, 0034, like it's counting down the 1 minute. Now the current candle is green because the opening price obviously is lower than what the closing price currently is.
Sorry, it's just
Now,
my computer's lagging.
that's all right. That's all right. Now it's gone red. So obviously the closing price, there we go. And you see how that red candle got a bit bigger. So therefore the closing price is currently lower than the opening price. Now we've got 5 seconds to go.
Where is the ticker? Okay.
The ticker's
It's
on the right. On the right.
Got it.
Just under the
On
price.
the right is on the right is the price, and at the bottom is the timeline. So we can see.
Yeah, but the actual time, like the hour, like the minute ticker, it's usually under the price. And it was there before. Is there a reason why it keeps disappearing?
I'll close my Binance. Okay. I've got like 20 windows open. Sorry.
Yeah, okay. Because there we go. There's that ticker.
Okay.
You see the countdown timer underneath the price.
Yep.
So that says 30 seconds currently. Obviously, Kevin's computer's lagging a bit, but there we go. 18 seconds. So as you'd be looking at it, you would see the seconds counting down. So now it's gone red again. So there's 10 seconds left of this minute. 8 seconds. It's counting down. That candle is closing lower than the previous one. There we go. So it's just printed that 1 minute candle, and that 1 minute candle will stay there forever. It'll never disappear. That 1 minute candle will stay there. And now that next minute has started, and we're now building up again, and we're building up. So it's saying that you didn't want to see my face anymore, Kev, but that's fine.
Yeah, I'm just shutting down
my video, but that's fine. And
goes faster.
Yeah, so there you can see, right, that that 1 minute time frame, as it counts down, you can see that it's printing a green candle there. So if that in 17, 16 seconds time, that candle finishes above the opening price, it'll stay green. If it goes below the opening price, it'll go red. So there we go. 4, 3, 2, 1. There we go. So that green, that has printed a green candle there. That'll stay there forever, as in that 1 minute time frame. And now we've opened another candle, which will play out again, and so on and so forth. And that exact procedure that you guys just saw then is the exact same thing that happens on all the time frames of all the candles, all the way up to the yearly candles and whatever else it is. So yeah.
So another way to look at it as well, I'm not trying to confuse you guys, but you can kind of see here, I've just converted where the candles have opened on the left, and then on the right side is where they close. So this bar chart kind of shows that as well. If the candles are a little bit hard to read, you follow the line like a snake. If I go to the 1 hour chart and reset this, so we discussed before, zooming out, pulling out of things so that you get an overall picture. So over the last hour now, because we're in the 1 hour chart, and you can tell that here on the left, you can see here that in the last hour, the price was down here. It went low to this point, went high to that point, and then now it's just hovering above where it opened. And there's 1.2 minutes left, or until this candle closes. Whereas if we were to zoom in on this, as the say the last half hour, just so I can break it down. So remembering that this little star looking candle there is 1 hour, but then now we've zoomed into the 30-minute candle. So that 1 hour candle is broken up into these two candles here. So you can see that when the candle first opened, it actually was at this price, came down to here. Oh, sorry, opened this price, went up here, came down to here, then closed at this price. So that was the first half hour. Then the next half hour, it opened here, came down to this price, went up to this height, and then now it's about to close in like 30 seconds. Is everyone with me so far?
What's the timing on this? Like,
Just in
is
seconds.
it just second by second by second by second.
Yeah.
And when you were talking about, when Troy was talking about in 1 hour, does it, yeah, I'm just kind of.
The countdown timer is just in seconds. So here, if when we're in the 1 hour chart, sorry, my computer's lagging because like it's got to process the videos and everything that's coming through. So this timer here on the right, the ticker, you can see we just opened a new candle and it's at 59, like there's 59 minutes left roughly until this candle closes. So right now, because the price is heading down, the color is red. But as a trader, we wouldn't look at this as like, oh my God, the price is going down now, so therefore we should take trades going down, because you can see there, it just turned green. And so a candle doesn't form its shape and color until the timer is finished. So within the hour, this will fluctuate, right? But if we zoom into that candle, so I'm going into 30 minutes now. So we're splitting the candle. The one candle that you see, we're splitting into the next, the previous 30-minute blocks now. So you can see that we're still at that level, and that 1 hour candle is split between these two. Is that making sense?
So yeah. So what it basically is, Linda, is that each time we change, so what Kevin's doing, you see on the top left-hand corner, Kevin's changing the time frame. So at the moment, we're looking at 30-minute candles. And now when Kevin presses the 1 hour mark, we'll be looking at 1 hour candles. So each of the candles represents 1 hour time, 1 hour of time. And then we can keep going, so on and so forth. So when Kev presses on the D, that means daily candles. So each of those candles now represent 24 hours of time or a day. Now, the reason why we want to see all these candles, there's a variety of reasons, but as a trader, we want to see all these candles depending on what time frame you want to trade at. So all you need to know, without just bogging down into it and getting ridiculously confused, is just each time you click on those time frames, just know that each of those candles represents that time frame. So if you click on the 1 minute chart, it means that each of those candles represents 1 minute of time. If you click on the D chart for the daily, it means that each of those candles represents 1 day of time, so 24 hours of time. And the process of how a candle gets created is exactly the same if it's a minute candle or a weekly candle. It is exactly the same.
Okay,
so there's a high and there's a low, there's an opening and there's a close, and it'll get printed as red or green at the end of that time, purely based on the fact that did it close lower than it opened, and if that's the case, it gets printed red. Did it close higher than it opened, and if that's the case, it gets printed green. Does that make a little more sense, Linda?
Yes. Thank you.
Okay. Cool.
So what we're looking at here is the monthly candle chart of Bitcoin since 2011 over here, and you can see that even though things have ebbed and flowed, it's generally been going on this trajectory going up. And so on the right here, you can see that there's 18 days and 15 hours left until this candle is formed. So yeah, that's why it's important to zoom out and just get a bit bigger picture of where things are heading, which then allows you to make better decisions in smaller time frames.
So you see that, do you guys see how what we're talking about, because each of those green and red candles represent 1 month of time. Okay, so 12 of them represent an entire year. So you see what we mean. All this candle structure in this pattern is represented from, when is that? In 2011. Looks like the back end of 2011. So October 2011. So what we've got here and what we're seeing, right, since 2011 till today at the end of 2020, so a 9-year period, that is an upward direction. I don't know how much more upward trajectory we can get. And you see how when we spoke about those patterns of euphoria, all the way down to disbelief, all the way down, down to anger, down to depression, and then the build up again, right? Can you see how this has played out 3 times now, right? So the art of probability and the data that we have from the last 10 years tell us that we're going to have the exact same scenario played out again. And that monthly chart is a prime example and a prime way to see that the upward trajectory of Bitcoin, and why so many people in this space, and why big institutions now, and why big companies like PayPal and everyone else that we spoke about yesterday are jumping on the bandwagon, because the upward trajectory in the last decade is insane. This is the daily chart that Kev is showing now, and this gives us a better idea to kind of show you guys. You're going back to the previous.
Yeah, I want to go back
Yeah.
to where, so then you can sort of get a feel for the chart. Sorry about the internet being slow. I'm on an island.
No excuses.
I'm unmuted, yeah.
The crazy thing is, right, I'm at a spot that's an hour and a half north of Sydney, and most of the time Kevin's internet's better than mine, and he's on an island. So yeah, just shows that it's not that bad, mate.
Yeah, my girlfriend's probably watching something on Netflix or watching a trading thing in the other room. So
yeah, it's lagging a little. But did when we just while Kevin's setting that up, when we saw when you guys all saw that monthly chart that Kevin had up from the last 10 years, does that give you guys an understanding of why people like Kevin and I and other people in the space and these massive companies are so bullish on Bitcoin?
Yes, definitely. You can definitely see the evidence of it on an upward trend.
Yeah. So when you zoom out and you take a good look, and you kind of we call it just minimize the noise, right? Just silence the noise, because there's the noise of, oh, today Bitcoin dropped $1,000, and then last week Bitcoin went up $2,000, and then the week before that it dropped down $3,000. It's all noise in the grand scheme of things, because when you zoom out and look at the last 10 years, Bitcoin has played out exactly to how market cycles play out. And if we're to base future predictions, and as traders, that's what we do, we work on the art of probability to base future predictions of the market. It will tell us from the last 10 years of data that we have that we're about to enter into the next phase, which is that, just past optimism, heading up into, ultimately euphoria. But as traders, what our plan is to do is to cash out at the top, just when all the dumb money are putting their money in, is when we will, and hopefully you guys will as well, on this journey that you guys hopefully take with us, be able to cash out at a time where you can benefit massively from it as well.
Maybe define dumb money and smart money.
Yeah, for sure.
It's not about stupidity, but it's more about what.
Yeah. Thanks, Sharden. Yeah, good point. So the difference between dumb money and smart money is exactly what Sharden just said. It's nothing to do with stupidity. There's some very, very smart people that put their money in January 2018. Sorry, December 2017, when Bitcoin hit its all-time high. The thing is, we in a trading sense, we call it dumb money and smart money, because dumb money puts their money in at the top of the trend and then panics as it goes all the way down and takes it out at the low. But smart money buys the low, and the saying is called, the best time to buy is when there's blood on the streets. And the reason why there's blood on the streets is because there's red candles everywhere, right? Because it's dropping down, and everyone, so all the dumb money per se is selling, but all the smart money is buying at that time, because they know that market cycles exist, and it's going to see the light at the end of the day, and it's going to pump back up again eventually, and that's when they will take their paycheck again. So we probably should refer to the dumb money as more so uninformed investors. So an informed investor buys at the bottom of the market and sells at the top, an uninformed investor, right? Which unfortunately is always the way. Your mum and dad investors, your your retail investors, the people, because they turned on Sky News, saw that their favorite celebrity just bought Bitcoin. Those investors, they're the people who buy when euphoria's kicked in and want to be part of the bandwagon because FOMO has kicked in, so the fear of missing out has kicked in. So uninformed investors buy on the way up and at the top, and then as the market's falling out of the sky, they're the same ones that are like, oh no, it'll be right, it'll come back up. But then it gets to a point where you hit the anger point and the depression point when they just can't take anymore and they sell at a dramatic loss. To the informed investors who once again buy at the bottom and then ride it all the way up and sell at the top. And this cycle happens over and over and over and over again, not just on Bitcoin charts. Bitcoin's a prime example of how it happens, but this has happened on stock market charts and market charts for many, many, many years.
Yeah, so I'll illustrate that like in real time. Where when Bitcoin launched on this exchange, it was at this price. So if you look to the right, it's roughly let's say $12, right? And then at the bottom there, that was 18th of August 2011, and then we move over here to 21st of November, and it's down to $2.24. So at that point, whoever bought in there was really smart and got in on things, and the ebb and flow of the market started there. And back here, notice that where it was reaching the top here, if you look left, so always looking left at the data, you can see that's reaching the previous high or the all-time high at that point. So naturally, whoever bought at the bottom would have taken some profit and then bought up here again. And as we go through this, I'll just scroll quickly, but notice what I want you guys to pay attention to is the price on the right and also the timeline that we're in and the jumps. So we already know that
2012. That's 2012, guys.
Yeah, 2012. So at that time, end of 2012, early 2013. So we're in 10th of April 2013. Bitcoin had reached $258, say. And then same thing, oh no, the market's crashing. Or you can even see here, this is that point in the market psychology where, there's that crash, but then there's the complacency. And then, further down, there's denial. It's still gonna make it. There's depression and all that sort of thing, anger. And then eventually, as time goes by, over here, looking left again, it reached that all-time high and then kept going, right? And then so as we scroll through, same thing, created a new high here, people started selling off, it hit the bottom, and then it started going back up again.
And isn't it amazing, guys, that this is a daily chart, right? So look at all these we call this trades within a trade. Look at all these patterns that have happened as we zoom in on that monthly chart. So if you just looked at the monthly chart, there's just this 3 curves that have all been on an upward direction. But when we zoom in, this is all the kind of, I'll call it all the magic that happened in between. This is all the kind of bounce around movement that happened in between.
Yeah. So I'll keep going.
There we go. We've hit another high there back. Sorry, mate. At the end of 2014, we hit the high there of 1,000. Where's that? Yeah. So that's $1,200 on November 2014.
This one here. Sorry, at the back there. Yeah, October 2014, November 2014, around that period. And then it took, until January 2017 that.
And look at that. Look at that. Look how that's played out. Look how that's played out. The exact same thing. So complacency, denial, it's just
depression,
like that's it's everyone's fault. Depression. And then, hang on, optimism. And then we're back again. Right. And then here, January 2017, we're finally found the same high that we were before. And then over the space of that year, it's done that whole phase, right? It's done that optimism into belief, into euphoria. And then once again, we're playing out the same thing again.
Yeah. So
where we are.
This is from, you know, the peak at 2017, right? December 17 to be specific was when the first red candle was printed going down, because that was the day before my birthday and the crash happened on my birthday. So I remember it well. And you see, it went down here and see these price levels. It got to a point where, you know, this was probably the biggest move down, where it's like, okay, that's it. It's dead again. And then people are like, okay, smart money comes in, they're buying it. We got close to the previous levels, right? And we were on this trajectory again, moving up. But then this section here, notice the date on the bottom there, 12th of March, or even going a little bit earlier, 7th of March this year. What happened? You know, we had COVID come in, all the lockdowns and everything. So, you know, the market crashed, but then it recovered again. And we continued on this trajectory. Getting close to September, you know, we were reaching the psychological level where at this point, Bitcoin had crossed back over $10,000. So we went from, you can see there, going from 10,000 to 12,400. So then it created, you know, this buzz of like, okay, we're heading back to the top, guys. And then now we find ourselves at that point where we're, you know, just about to push through. So the potential here is that we actually do push through and then create, you know, newer heights here. And you look at the pricing here on the right. Okay, it's like exponential growth. Or the other potential is that we don't push through and maybe we come back down and hit somewhere closer to the trend. But eventually, given the data that we have, the likelihood or the probability of it continuing to rise is a lot higher than thinking that it's going to crash all the way down to zero.
Considering that's the pattern that it's played out for the last 10 years.
Yeah. So I hope that makes sense. Does anyone have any questions about that so far?
Really so kind of if we look at the trend for the last yeah, exactly. If we look at the trend for the last 11 years and the cycle, the psychology cycle, we're pretty early in a cycle right now, actually. Is that correct?
Yeah, absolutely. Like we're in that point. You can see how there's this formation. So we're talking about patterns, right? That looks like a cup, essentially. So each time it's hit a high, there's a cup that's formed. It comes back to that high, and then it goes up, and then there's a bit of a sell-off, and then, you know, further movement up. Then this cup goes up, bit of a sell-off. This cup's a little wider, I guess you could say, and then moves up. Same thing's happening here. We're forming this other cup. So there could be an immediate push up, or there could be a little bit of a sell-off, and then eventually, going by the pattern that we're recognizing here, is that it's going to curve back up again.
Okay, so we're way before euphoria, and euphoria is the place to sell when everybody's jumping in.
Yes. I mean, here, if you look at this level here, right, from just before 2017, this is the point where if you look left, it roughly reached the same height, and there was a little bit of what's called a correction, right? Because it's a little, you could say it's a little euphoric because, you know, people want to jump the gun and there's money coming into the market because they're like, okay, it's going to go up, but then a lot of people also sell off, but it's not enough to bring the whole, you know, the whole market down or bring the trend down. Like, I mean, even if you look over here, when the COVID announcements were sort of made, we hit back down to this trend line, and funnily enough, it bounced back up, right? So even a massive global pandemic such as COVID was 1, 2, 3, 4 candles worth of news in the week, and then now we're back up here. So you can expect that you can see here. So I'll zoom into these candles, right? Because we're talking about where we are now. So in the last couple of weeks, right? I'm trying to fit everything into the screen. So in the last couple of weeks, so this week, Bitcoin price was close to the all-time high. And then it went down here somewhere during the week. And now we're closing what looks like, you know, there's another 14 hours left to go for the end of the week, technically, you know, end of Sunday, and we're at the moment it looks like we're closing just under where the candle opened, right? But who knows what could happen in the next 14 hours? We could close above as well. But regardless of where we open, where we close, we're at that point where the potential for it to move either way is, you know, it's 50-50. And as a trader, you have the knowledge and the options to go, okay, if it goes up, I have a particular trade plan on you know, buying at this point and then continuing. Or you could say, if it goes down, well, then I'm going to buy somewhere towards where it reaches the trend line and then comes back up again. So there's that option if you're going long or if you're bullish. If you're bearish, which is going the other way down, and you think it's going to go down before it goes back up, as a trader, you also have the option to short the market at this point and make money on the way down by selling high and then buying low whenever it reverses. So I'll get into that a little bit further down when we revisit this chart, but I just want to make sure that everyone understands, you know, the concept of candlesticks and perspective, you know, zooming in and zooming out. If you're watching the 1 minute candles, you can imagine how much stress would be built up in your system if you're trading, you know, minute to minute, when the overall picture is a lot wider and a lot less stress free.
And just to really quickly add on to what Jarton was saying, and just in regards to the euphoria stage, if we look at the end of 2017, euphoria probably only really lasted around about 5 weeks, right? Because it went from
5 candles.
So it went from like $6,000 to $20,000, right? So it like nearly, well, it tripled in value in like a 5 week period, right? So that's a true euphoric state. There was literally like just a steam train for 5 weeks. So often euphoria can be short lived. It can be even quicker. It could be a little bit longer, but you know, don't be surprised if that euphoric state, that's really a time to really have your senses up, because that euphoric state can be extremely quick. Like 5 weeks in trading is a blink of an eye. So
okay, so the reason why now it's not a euphoric state is because there has been a previous high like this.
Correct. Yes, there's been a previous high, right? We were so if you go back down, the previous high before it broke in when did it break? In March 2017-ish, February 2017 was it? But the previous high before it broke there was that $1,200 mark, or $1,100-$1,200 mark. So then it finally broke that in about March 2017. And that's when that kind of optimism kicked in, right? So when you kind of break that high, that optimism kicks in. It's like, oh, wow, this isn't a suckers rally. This is actually legit. And then, you know, you go into that belief phase, and then up to, you know, euphoric by the end of the year. So that's, I guess, based on the current trends and the current trajectory, that's why a lot of traders and a lot of very smart people in the business are so bullish on 2021 into 2022, because this pattern's been played out.
Cool. So as I'm observing my emotions as I do, because that's kind of like, you know, my expertise.
Yeah.
It's telling me to, you know, run and buy right now. That's kind of like my emotional state watching this.
Yeah. You know, look, there's a lot of smart money that is buying right now, right? And Kevin and I aren't in a position to tell anyone what to do. But based off data, that's all I'm going to say.
Like, yeah. Like, I mean, if I'm looking at the trends, it's like, you know, now is the opportunity to buy, and whatever I purchase now to take profit off of it once it's kind of reaching this, you know, insane euphoria state.
Yeah, but like it will look, you know, based on Kevin and my analysis from a fair few years, and also from these other people, that's what we believe, that trajectory is in that way. But you know, this is trading and these are markets, and there are crazy things. So anything is possible in this. We could hit another top, and then, like what Kev said, really break that trend and drop back down to $5,000 or $6,000. Based on 11 years of data, it's highly unlikely, but anything is possible in the market. But yeah, look, 2021 into 2022 has been earmarked for a few years now as a possibility of lots of things.
Yeah. Yeah, just to add on to that, when you're looking left here and looking at, okay, this is the previous high level, and then, you know, it broke through, it's easier to see on the scale of pricing here that, you know, there's been these moves that have gone from dollars to like thousands of dollars. Whereas because the moves are somewhat exponential, then on the right here, as we get further higher, like if you can imagine like these lengths of the moves happening here, that's why, you know, people are bullish that if you've got the investor mindset, we were saying before, it doesn't really matter whether you rush out and buy now or buy in a month's time, if the price is down here or if the price is up here, whatever. If your view is that you're going to wait until 2025, 26, 2030 or whatever to cash out, then, you know, there's no point sort of umming and ahhing about going, oh, should I buy now at 18,000 or should I wait till it's 16,000 or wait till it's 20,000, whatever. That mindset is aligned with that sort of dumb money perspective, not being stupid, but just like if you were just to
uninformed money.
Sorry, the uninformed money, if you were to just buy in now without being informed about the market cycle, and then you were to see Bitcoin come down to, you know, $6,000 or something like that, and then you decided to sell, that's dumb. That is the, you know, the uninformed play happening. Whereas if you're totally comfortable going, I'm going to buy Bitcoin at 20,000, and even if it hits 6,000, I'm going to be strong and hold my hand, like hold, you know, my deck, the cards, because I'm not looking to cash out until it reaches $100,000 or $80,000, whatever that may be. There's no guarantee that it'll happen, but based on the data that we've been looking at, based on the patterns that we're recognizing, you know, it's worth getting that reward for what you're risking. And that's why, going back to what we discussed about allocation, you know, allocating your buckets. Like if you've got money that you need to have in your now bucket, don't go using that now bucket or now bucket money to go and invest in Bitcoin. Whereas if you've got some money for you know, your retirement, whatever it is, you're planning on buying, you know, a mansion or whatever down the road, that's the kind of play money that you could surmise, like, hey, you know, it'd be worth the risk, or, you know, to get that reward.
And can I just ask a question here? So if you were to do the now, soon, and later kind of buckets, and if you were to go, okay, later bucket now, what's the percentage allocation you might, or is that just depending on?
Yeah, it's arbitrary. It's or subjective, because there's two, or there's probably more than two, but there's several ways you can approach it. So if your approach is that for now, I need $5,000 every month in the bank because I need to pay rent, I need to pay gasoline, you know, whatever bills, then don't go touching that cookie jar of now, right? And if $5,000, say, is you know, 10 or 20% of your total income stash, or your total assets, your total finances, then you might, you know, gear it towards being less risky and just making sure you have that percentage in your bucket, and then, you know, more allocation towards your soon and later buckets, right? Alternatively, depending on your financial situation, you could be like, well, you know, it's usually, you know, younger people like, I don't really care about the future. I'm going to make hay while the sun still shines. I'm going to put 80% of my allocation into this bucket, into the now bucket, not based off needs, but based off what I want to earn now and what I want to do filling this bucket. And, you know, a smart investor, say, or smart trader might go, okay, I'm putting more on this, but I'm also putting in more time and effort in order to maximize this bucket, because I don't want to put all my eggs in this bucket. But, you know, taking more risks so that I can reap the rewards later. So it just depends on your risk tolerance and your perspective of, you know, from an investor's perspective, where you plan to, you know, cash out, I guess. But from a trader's perspective, that doesn't really matter. It's more about the time and effort you put in to grow your skills. So yeah, sorry, there's no real straight answer for it because everyone's different, right? But you might try something simple first, like, you know, 20, 30, and then 50 for the later bucket, or you might go 50, 30, 20, or 70, 20, 10, or something like that.
And is the I guess the time commitment proportionate to or relative to the now, soon, and later buckets? Like, it's the longer, the more you have in the now, the more time you have to commit. The more you have in the later, the less time you have to commit, or something.
It's okay. Let me switch to this. Can you see my desktop? Oops, that's my.
Yes.
Okay. Can you see that this compounding calculator that I've got?
Yes.
Okay.
But it's very small.
Yeah, let me zoom in on you. Why won't it zoom in? Come on. My keyboard. Okay. Is that better?
Yes, now it is. Now it's good. Okay. Thank you. Yeah, that's
let's say your trading account, you're starting off with $1,000, right? And you're willing to risk 1% of that, and your leverage is just we're just doing one-to-one trades. So what this means is that if you're putting in $1,000, or $1,000 is your total account, that's in your, you know, trade allocation bucket, let's say, you would enter trades risking $10. Right, and say the risk to reward ratio that you're looking for is 1.5, meaning if you put in $10, your potential profit is $15. Are you with me so far? You can change this to go, okay, I'm only entering trades that I get a 2-to-1 reward, in which case my profit would be $20. So let's just go with you know, 1.5, because that's a, you know, relatively safe or achievable risk to reward ratio. So on a $10 trade, you'd make $15. If you did want to withdraw, say, 2% of that, I just added these extra columns. So like, if you wanted to withdraw 2% of that, or 5%, or whatever, for your cash flow needs for filling the now bucket, you know, you could do that as well. I'll put this at 0 for now, because this is just something I do. So say you did a trade, risk $10, and you made $15. Your balance would be this amount, right? And then so on and so forth. So you can see after, you know, let's go to, I don't know, 30 trades. At 30 trades, your trading account would now be worth $1,500, and your position sizes would be $15, and, you know, so on and so forth. Now, whether that's enough for you, like say this was, rather than thinking of it as 30 trades, if this was 30 days where you placed just one trade a day based on this, or maybe several trades to achieve this risk to reward, then you'd have to figure out, okay, does that suit your needs and desires and you know, your risk profile and all that sort of thing? You know, you might go, okay, I'm going to you know, look for trades that are double that, you know, 2-to-1, and then that will change accordingly based on your projections. If you were to getting a little bit more advanced, but just to show you guys, so if I was to do 10x leverage on something, right? So where I'm risking $10 on a trade in order to basically profit, you know, double that on this. I'll make it back. Sorry, I'll make it back to 1.5. Keep it conservative. So risk $10 in order to make $150. Then you can see, like, if you were to do, you know, these trades, at some point you get to this point where, you know, trade number 51, you're working with $1 million account, but you're only risking 1% of that, which is $10,000, and, you know, for further potential gains. You can imagine the psychology you need to have at that point to go, yeah, okay, I've got $1 million in the bank, and I'm only going to put $10,000 in the account, you know, to trade. It's all everything's relative, I guess.
So is this it? But is this an investment strategy, or is this a trade? This is a trading strategy.
This is just a calculator for compound interest, basically based on. This isn't a trading strategy. This is just if you were to combine these rules. Remember, I mentioned there are certain rules. So if I go back to my other screen, so let me get out of this. Go back.
So hypothetically speaking, you could have you could start with $1,000 when we're talking about this particular calculator, and within 50 trades at the
sticking to
how
those
you've set it up.
Yeah, sticking to
so sticking to those rules, you'd have $1 million in 50 trades.
Yes,
but you'd have to be trading and not just holding it.
If you traded and got it correct, so that's just based on 50 correct trades, like you know, in a row. Obviously, like if you traded and lost, you know, money in between or whatever, then that would add to it as well. But that calculator is just based on winning trades. So 50 winning trades is more accurate. It's not. I'm not saying like go out with $1,000 and you know you do 50 trades and you'll have $1 million. It's just trades following that particular strategy. So like say an example of a strategy is here where you know I follow these particular rules if I'm doing this particular strategy, and this particular strategy, I don't know if you can see there, it's you know,
it's very small. I can see it.
This is the strategy I use to look for 2-to-1 trades. I use that so I can double my money. Whereas there are other trades where I'll look for this one, like a 4R, which is 4-to-1 risk to reward. So everyone has different trading strategies. But yeah, potentially that calculator is to just show you the potential of what can be done if you follow a strategy. It's not unrealistic because I've seen other people do it. I haven't done $1 million in trading, but I've achieved, you know, I'd say a couple of $100,000 from doing it. And I've lost a couple of $100,000 as well from doing it. So yeah, I'm not trying to say that you'll get that in 50 trades. It's just the possibility of winning those trades if you stick to a plan, you know. So
what you're saying is how much did you start with?
With me, I I started with initially like a couple of $100 and a couple of thousand. I went through a period where, you know, I had 10 different credit cards. Like I've done all the stupid things that you shouldn't do. Yeah, I've gone through a period where I had 10 different credit cards, and you know, I was trading minute candles where in 1 minute I'd make $40,000, and then a minute later or 2 minutes later I'd lose $20,000. And like I've liquidated accounts before in the past. Liquidation basically means where you've lost all your money. And yeah, truth be told, I've lost a lot of money learning. You know, that's the important part here. Like initially I used to feel guilty about all the stupid things that I did. But then I learned from those mistakes. Those mistakes turned into experience, and luckily or thankfully, because you know, remaining teachable and also having support from the community, it led to, you know, the resort. Like the place that I'm lucky enough to live in now has been paid for from some of my savings, from some of my trading, from other people's investments within the crypto community space. So it's a combination of a bunch of things. Like had I known what I know now and applied that back in the day when I was trading, sometimes it makes me sick thinking of, you know, how much I'd have now.
But I guess the moral of the story is that you still started with whatever $200, and now you have a resort. So there's hundreds of thousands involved in there that just started with $200.
Yeah, I know people that started
regardless of the ups and downs in between.
Yeah, and overnight millionaires. I don't know if you were there at the start of the call, but I was trying to find this bot. So sorry, going on a bit of a tangent here, but it's important to the overall scheme of things. So I do bot trading. So sometimes I allocate money, and like an algorithm, a robot, basically just trades on my behalf, right? And going back to what Troy was saying yesterday about being an active trader or an active investor, because I put that money into a bot that I wasn't active on, I wasn't actively watching it, I offloaded my responsibility to that bot. I put in like $250, $280. And when was it, Troy? We were looking at it this morning. On the 18th of November this year, the price went from $322. It went up to $11,458 in one day. But because I offloaded my responsibility to the bot, I wasn't paying attention. And then at the end of that day, the price went from $11,458 back down to like $350. So I missed an opportunity in that period, whatever the candles were doing at that point, to make, from $322 to $11,450. That is not unfounded or unrealistic in the crypto world, because I know people who have, gone from hundreds of dollars to hundreds of thousands of dollars, or thousands of dollars to millions of dollars. And it works both ways. I've known people who have made millions of dollars and then lost it all, or come back down to, it's volatile. But if you're active and keeping an eye out on these things, and then you've got your psychology in check, and you follow a plan, it's definitely like life-changing, I'd say, is the
super
most
rewarding.
Sorry?
It's super rewarding. But like what I said, you've got to be active and aware. And I think one of the key things there that Kev did different, that a lot of other people didn't do different, is that he left his mind open to education, and he's left his mind open to learn new things and do new things. Touching on that compound calculator, and I'm sure most people in this group, and maybe some people listening to the call, haven't heard, but using a super quick way of explaining it is that, if you did start with $1,000 and you simply made 10% on that $1,000 and didn't touch it over 5 years. Now, 10% in the trading world is extremely conservative to make. And if you didn't touch it for 60 months over 5 years, right? 60 months, that $1,000 turns into $300,000. And that's just simply by trading and making a conservative amount of 10% per month. And then if you go and simply just do another 2 years, so if you take it to 7 years, that ends up being $3 million, right? So it's art and ball steel to be able to get to that point, but and push through there. But these things are possible, and it's happening. It's just a matter of pushing through and believing in yourself and sticking to your plan.
But this is not people who just invest and then hold. This is you have to be trading in between. Is that what I'm understanding?
The examples that I've just given then are people who trade and make a conservative amount of 10% a month, but people who do buy and hold and do other methods like what we showed you guys yesterday, there's plenty of different methods like staking and all sorts of other things. Life-changing gains have been made for those people as well. People who bought certain coins at certain amounts and they've boomed, life-changing gains have been made for those people as well. People who simply, may buy Bitcoin or Ethereum at this point, right? And if it does go to some of the projections, even if it times by 5 or times by 10 or whatever it may be, that's life-changing gains for some people, right? And for most people, that would be absolute life-changing gains. So it's all relative. Like what we said, define your life-changing gains. Like someone's life-changing gains could be $3,000. Someone else's life-changing gains could be $3 million. Like it just depends on that person and how relative it is to them.